Now, once we get these right, we can then come to the preparation of the actual study plan. Now, I'm going to show you a sample of a study plan here. This is a public document available. It's an ACCA document, so it's publicly available. We're going to be having the days on top there, as you can see. Now, certainly, as I said, you may not learn from Monday to Sunday. Please be reasonable, okay? This is not like, oh, I'm doing something. Don't stop lying to yourself. Be realistic, but challenge yourself. So if you can't do Monday to Sunday, whatever the heck days you would do it. That's why we said time available, your peak time. Your peak time. So once you know your peak time, all right, we're going to be having, when are you going to start studying? When are you going to end? And you could see every week what is there, and then the main activities that you are going to be undertaking. Now, what it means is that, as I said, you don't say, oh, Monday, from 9 a.m. to 10 a.m., I'm learning financial reporting. No, that's not what you do. So let's say you are writing financial reporting. You have to break down the financial reporting into the key areas that you need to understand. So when it comes to the financial reporting, what are the key areas we have to be mindful of? The first area in financial reporting that we have to be mindful of are what we call the theory areas, or what I call the theory areas. And this includes things like ethics, the conceptual framework, and regulatory framework, the IFRS foundation, governance. Okay, these are all some theory areas. Number 2, we come to the accounting standards, the IFRSs. Number 3, you come to the single entity financial statement. Number 4, you come to the evaluation of the financial statement. Okay, number 5, you come to the consolidated financial statement. But stay with me. Because when it comes to the IFRSs, you have to even further break that down. Because you cannot just write on your study plan IFRSs. No, you have to break down the IFRSs. And so when it comes to the IFRSs, what are the IFRSs that we need to understand? It depends. But we can talk about the non-current assets IFRSs, which will include IAS 16, property, plant, and equipment. IAS 23, borrowing cost. IAS 20, government grants. Okay, accounting for government grants and disclosure of government assistance. IFRS 5, non-current asset held for sale and discontinued operation. Then I can bring IAS 40 here, investment property. So these are like non-current asset accounting standards. Okay, but connected with these non-current accounting standards are some other accounting standards, such as IAS 37. That is provisions, contingent liabilities, contingent assets. Okay, IAS 37, provisions. Then we can talk about IAS 38 or 36 first. Impairment of assets, IAS 38, intangible assets, right? Then we can bring in IAS 12, income tax. So what are you trying to do? You are getting a breakdown of the accounting standards. You are getting a breakdown. So in your study plan, you're not just writing there, oh, today I have IFRS. What kind of IFRS are you studying? What IFRSs are you reviewing? Are you getting the idea? So that's what's happening here. So the non-current asset accounting standard and the one that are connected, also we have IAS 21, effect of changes in exchange rates. Then from these, we come to the connected accounting standards. There are 3 of them that are connected with each other, like IFRS 9, financial instrument, and then IAS 32. So IFRS 9 is financial instrument recognition and measurement. IAS 32 is financial instrument presentation. That is for dealing with compound financial instruments when an entity issues convertible loan notes. And we have IFRS 7, financial instrument disclosure. So when it comes to financial instrument, there are 3 different accounting standards there. Then we come to IFRS 16, which is leases. Then we come to IFRS 15, revenue from contract with customers. So these 3 standards are interconnected, interrelated. We have to know about them pretty well, because when it comes to leases, for instance, leases, when we are dealing with sale and lease back, that is where IFRS 15, revenue from contract with customers, where performance obligation is satisfied, then we can recognize revenue. And then the IFRS 9, financial liability, will come in that regard. And so these are connected standards that we need to be mindful of in that case. Then there are some of the other standards that you still have to be aware of as a financial reporting student, and that is IAS 2, inventories, IAS 41, agriculture, IAS 8, accounting policies, changes in accounting estimates and errors, IAS 10, events after the reporting period, IAS 33, earnings per share, and then we come to IAS 24, that is related party transactions. And so in the preparation of your study plan, yes, the theories, ethics, conceptual framework, the IFRS foundation and how standards are set, and then governance. That's the theory area, 20 marks waiting for us in the exam hall. Then you come to the standards area. Right? So what are the accounting standards? These are the accounting standards. So on your study plan, the days that you're going to be having IFRSs, you are going to be listing what IFRS you are looking at on the study plan. That is what we are talking about here. So it's not like you are having a blank event coming up. No, you're going to list specifically what IFRSs you are looking at. And these are some of the IFRSs that we need to understand when it comes to this. Now, the reason why the IFRSs are important is because we will have a dedicated 20-mark question on the IFRSs. Then the single entity financial statement preparation, there's a dedicated, all the footnotes are accounting standards for the most part. Then even under the evaluation of financial statement and consolidated financial statement, we may be required to apply the accounting standards. And so you must understand the accounting standards. And this is the breakdown of the accounting standards. The non-current asset ones, the ones that are connected with those non-current assets that we need to be mindful of, the 3 standards that are connected with each other, and then the other ones that we have to be mindful of. Then you come to evaluation of financial statement. Now, even when we come to evaluation of financial statement, there are types of questions that the examiner can set. It's not just about calculating ratios, interpreting the ratios. There are types of evaluation questions that the examiner can set that you have to be mindful of. In some cases, the examiner will ask us to calculate and analyze the ratios. In other circumstances, the examiner will calculate the ratios for you or present you with a calculation, and the examiner will ask you to just write the analysis. Then we have the vertical analysis. We have changes in business. Sometimes the entity has acquired a business during the year, which means we are comparing a consolidated financial statement to a single entity financial statement. Other times, the entity had disposed of a business, and so we are comparing a full business which was there last year as against part business because a portion of the business has been disposed of in the current year. That's a question. Or we will be given financial statement plus footnotes for us to adjust the financial statement. Then we can now calculate the various ratios. So even when it comes to that 20 marks area, evaluation of financial statement, in addition to the theories there which include limitations of ratio analysis and the reasons or objectives of ratio analysis, we must understand the type of questions that the examiner is going to be bringing up when it comes to the ratio analysis. And that is the evaluation of financial statement part. And so when we say you are preparing the study plan, say for financial reporting, this is the breakdown we are talking about. This is the breakdown that we are talking about. And so when it comes to consolidation as well, the same thing. In consolidation, you must make sure you understand the basic principles when it comes to consolidation. How do you calculate goodwill? How do you determine group structure? How do you calculate the value of NCI? How do you deal with intra-group trading? All of those things are there. And then even the structure or the type of questions that the examiner can bring. Sometimes the examiner can bring a parent and a subsidiary. Sometimes he can bring a parent, a subsidiary, and an associate. Other times, the examiner will just get excited with you and then bring up a question where you don't have to prepare a full consolidated financial statement. It's just extract of things that the examiner wants to pick your brain on, or a joint venture arrangement, IFRS 11 in that case. And so this is the breakdown of, say, the financial reporting syllabus. So once you know the breakdown of the syllabus like this, that is what you now enter on your study plan. So let's say that you have, you are studying on Monday, right? So you have your dates coming up on Monday. What time to what time? Okay, you are learning something, maybe ethics. Okay, that's what you're going to be putting down, ethics. Then the next session, what are you studying in that same week? What are you studying? You put it down. What are you studying? You put it down. That is how you prepare the study plan. So it is not like, I have financial reporting. Nhyira, when I pick the book, I don't know where to study. I have strategic case study on my timetable. But when I pick the case study book, I don't know where to study. Every subject you are learning has to be broken down into the main areas. That is why I mentioned you must know the syllabus. Because if you know the syllabus, then you know the breakdown. That is why I mentioned you have to attend lectures. Because if you're attending lectures, then your lecturer is going to be telling you the breakdown of the syllabus, so you know exactly what you are supposed to focus on and what you are supposed to expect in the exam, or just like what I have done here for financial reporting.